Good evening, everyone. Welcome to the live coaching classes organized by Board of Studies ICAI. Students, today's evening is a continuation of our previous discussion on this topic called value of supply. In previous class, we have understood the provisions of section 15, which deals with valuation. I made an attempt to make you to walk through these provisions of 15 subsection 1, 2, 3, 4 and 5. Also, I have made an explanation of the related party transaction in our previous class. So I'll, as a protocol, students are listening to me, please drop me a message. You're able to listen and also you're able to see my screen properly. Once I have a confirmation from some of you, we would go ahead with our discussions for today's session. And before we start, I have to take up one question which came at the verge of my closure. Let me just read out the question for the benefit of others, and then we will have a discussion on today's class. There's one question from Mannan Kandelwal. Is asking this term. Restaurant is in composition scheme. The tax rate applicable is 5% levy. Under composition, 5% is the rate of tax. Okay. And that restaurant, in that restaurant, cigarette is being sold. Please confirm whether rate of tax charged on cigarette would be 28% or 5%. Now, I'll put it this way, Manan. See, restaurant is into composite supply. Now, when restaurant makes a supply under composition scheme, one aspect we need to keep in mind is no GST is collected from the customer. Rather, a bill of supply is issued, and whatever is the turnover, on the turnover, I would be paying 5% GST. Point number one. Point number two. In composition scheme, there is you classify yourself as a manufacturer, as a trader, or as a service provider. Now, once I call myself as a service provider, that is, I supply food for consumption, then my rate of tax would be 5%. Now, in relation to supply of cigarette, this is not covered under composition scheme. There are certain exclusions, certain category of goods which are kept out of the purview of this composition scheme. So my answer for your question, Mana, you have to examine first and foremost the provisions of section 10, where what all goods and services are permitted to be supplied under this particular composition scheme. I don't recollect this notification specifically, but to my knowledge, there are certain exclusions where a few items, like example, ice cream. As a composition registered person, I cannot supply this particular ice cream. That would be applicable, the taxed at the rate of regular rate of tax. Accordingly, only food is something which is taxed at the rate of 5%. Any other goods other than this, you will be out of composition scheme and you will be falling under regular scheme. Hope this is clear, Manan. Let me just see if any other questions are there. Thanks for the confirmation, Rahim and Geeta. Let's kickstart with our today's discussion. What I will do, I'll quickly glance through, or I'll make you to run through provisions of section 15, what we have discussed in our previous class. I have a MCQs, or I would say some questions that taken up from our previous class. We will examine those questions and then we'll come back to our valuation rules under GST. We started with this term called agent, where I gave an importance of this term called agent under GST, where section 15, subsection 1, the valuation provisions, there is a related party transaction. Agent is considered to be a party who is related under GST law. Consideration, we have examined this term consideration by way of this particular diagram, where green boxes are subjected to consideration. The orange boxes are something which are not forming part of my consideration. Like here, we had this aspect called deposits under GST. Any money collected which is accounted as my current liability, we would not call this as a consideration, and this is out of the purview of consideration. Then we had discussed this definition for market value. We had a detailed discussion on this definition of market value, where I explained the concept of like, kind, and quality. I also explained your same commercial level and about same time, where I gave example of supply of oil, supply of some quantum in 2 different months. All these examples we have discussed to examine what is the meaning of market value. I gave the example of Dell laptop with some features where we examined how we will ascertain this concept of market value under GST law. Then money, we have discussed on this definition. Then we had discussed on these provisions of section 15, valuation, where subsection 1, we have understood that the value of supply of goods and services shall be transaction value, where price is actually paid or payable. I have consideration which is fixed in monetary terms, and supplier and recipient of the supply are not related. When these two conditions are satisfied, then I accept transaction value as a value for GST purpose. Price should be the sole consideration. If these conditions are satisfied, then I would go under 15 subsection 1 to say this is my value of supply. Then we also understood under 15 subsection 2, where, sir, I have a consideration wholly not in money, price not wholly in money. Then I'll ascertain my value of supply under subsection 2, where it says that value of supply shall include point number A, which talks about your duties and taxes. We had discussed an example of a motor vehicle, where the motor vehicle, like we have road permit tax. We have discussed one example in relation to service provider who is into activity of renting of motor vehicle or hiring of a motor vehicle for transport of passengers, where a road tax is paid to different state authorities. That also forms part and parcel of my consideration. This is one example I gave with respect to any taxes other than GST. So here, other than GST, that shall form part of my value of supply. In clause B, I made you to understand where any amount supplier is liable to pay in relation to such supply, but which has been incurred by the recipient. Of the supply and not included in the price actually paid. We had discussed one example on a educational institution, where this educational institution have given a contract for construction to a service provider, where cement or paint was supplied by their donors to the service provider for the purpose of construction activity. By virtue of this particular section 15 subsection 2 clause B, we have to include those freebies which are supplied by the recipient, not considered by the recipient. This is one another inclusion we have discussed. Moving on to clause C, we had a very detailed discussion on clause C, where I gave an example of a chartered accountant who files ROC return, who also does a bank audit or stock audit. In this two cases, where I have explained what do you mean by incidental or ancillary expenses. Also, I made a clarification with respect to some way they use a term amount charged for anything done by the supplier in respect of supply of goods or services both at the time or before delivery of goods. Now, incidental expenses which are relevant for making the supply. In relation to bank audit, I gave example of travel expense. I gave example of hotel stay, etc. Where these two aspects I have examined pure agent concept under Rule 33. Under Rule 33. This Rule 33 examines when a pure agent comes in, where the activities of pure agent can be kept outside the purview of value of supply. Kept outside the value of supply. So in case of your incidental expenses, which are personal in nature, or consumption, which are consumed by service provider. When these aspects have been made, I cannot rather keep these incidental expenses outside the purview of my value of supply. This is one example in relation to clause C, which we have discussed. Moving on to clause D, interest or late fee. This is one fantastic point where we had an example examined. Sale of goods and sale of goods combined with extending loan, where we discussed this example in valuation chapter, sorry, not valuation, in exemption chapter. In exemption, we have discussed that when money or consideration is in the form of interest or deduction, or that is discount, in relation to extension of a loan or advance, that is exempted under GST law. So I could be a supplier who sells the goods. I could be a supplier who sells the goods, also gives loan or advance for that particular sale. Most of your electronic gadgets, when I sell a mobile, when I sell a laptop, I also give EMI. I would say that you buy this particular phone, pay this particular down payment, balance will be EMI. Those could be the examples where I have a consideration identified as interest. So clause D says that in relation to interest or late fee, penalty or delayed payment, consideration for any supply. So wherever I collect money by way of interest or penal interest for delay in making the payment, delay in making consideration, delay in payment of consideration, then this aspect would be forming part of my supply. Whenever there is a delay in payment of consideration, money recovered from the customer would form part of my supply. Last but not least, we had discussed on this particular clause E, where subsidy given by central government, state government shall be excluded. So other than subsidy given by state government, central government shall form part of my value of supply. For the purpose of this subsection, amount of subsidy shall be included in value of supply who receives subsidy. Then we had discussed on subsection 3. Which in detail talk about discount. I need you to understand there is something called trade discount, which is printed. On an invoice. Second aspect, I made you to understand post-supply discount. You can claim deduction from value of supply in relation to post-supply discount under clause B, where such discount is established in terms of an agreement. Where at what point in time this agreement should be established, which is entered into at or before the supply. At or before the time of such supply. So this particular clause B says that whenever post-sale discount has to be extended, please ensure that there should be a contract, there should be an agreement by virtue of which this particular discount has been given. Where I gave example of a cash discount given, where supplier will issue a credit note supplier will issue a credit note. I, as a buyer, would raise something called debit note. There should be a quid pro quo. There should be a quid pro quo. Input tax credit as is attributable to the discount on the basis of the document issued by the supplier has been reversed by the recipient. Has been reversed by the recipient. So there should be a credit note corresponding debit note. Credit note issued by the supplier, debit note is issued by the recipient. These are the aspects which I have made you to understand in relation to subsection 3. 15 subsection 4. Where value of supply of goods and services cannot be determined under subsection 1. Why is that I cannot determine under subsection 1? Probably a related party transaction or price is not the sole consideration. In those cases, such manner as may be prescribed. I travel to valuation rules. I travel to valuation rules. We have rule 27, we have rule 28, rule 29, rule 30, and rule 31. These 4 valuation rules will help us to understand how do we identify value of supply. Subsection 5. Notwithstanding anything contained in subsection 1 or 4, value of supply should be as may be determined by government on the recommendations of the council. Now, at this point, Marx has asked, so can you give example in relation to determination of value of supply in relation to corporate guarantee? Where I gave a detailed explanation what is a corporate guarantee, where how the value of supply is identified by way of recommendation of the GST Council. I gave one of the example in relation to 52nd GST Council discussion. These are the aspects we have discussed in our previous class. Let me come to my MCQs where we can quickly examine some questions, test our knowledge, and then start with our valuation rules. Matza, I have a question in relation to subsidy. I'll explain you in detail. And this question is in relation to that point now. Now, first question. Subsidy or grant is given by ABC Inc., which is a parent company, to the subsidiary company, Mrs. ABC India Private Limited, for rupees 20,000 per unit of motor vehicle sold. Price charged from end customer per motor vehicle is rupees 82,000. GST rate applicable at the rate of 28%. Examine the value on which GST has to be applied. So this is a question in relation to value of supply. 15 subsection 1, 2, 3, 4, 5. 4 and 5 are connected with valuation rules. I'm yet to touch upon valuation rules that I'll cover in today's class. So these are the examples framed in relation to subsection 1, subsection 2, subsection 3. So please examine your provisions, what we have discussed all along, and give your answer. What do you think is the answer for this? What would be the answer for value of supply? And when you give your answer, please indicate why is that this value is your value of supply. Rahim, what could be the reason for this value? Please mention, ma'am. Why you have considered 82,000, or why you have considered 1,02,000, or why you have considered 62,000 as your answer. I got 2 answers. Let me wait for one more answer. Mansa, your point is connected with this question. I'll elaborate in detail. Let me just get a couple of answers and then we will discuss on this. Okay. Rahim says 1,02,000. Shailesh says 82,000. Geeta also says 82,000. And Rahim says subsidy received from anyone other than the government shall be included in the value of supply. Perfect answer. I'll just come back to our institute material. Please open page number 6.9. Please open page number 6.9. Subsection 2 talks about value of supply shall include. What does it include? Clause number E. It says subsidy directly linked to the price. Subsidy. Now, what do you mean by subsidy? The term subsidy was not defined under GST law. In case of absence of any clarity or any, it is not compulsory that always I travel to General Clause Act. Subsidy or grant in general, it indicates that there's a reduction in value. This reduction in value is directly linked to the price. So here, I'll come back to my question where it says subsidy or grant is given by this entity called ABC Inc. to the subsidiary company ABC India Private Limited for rupees 20,000 per unit motor vehicle sold. The term motor vehicle sold draws attention saying that directly connected with this particular supply. Let me come back to material. Yeah. So here, subsidy directly linked to the price, excluding subsidy provided by central government, state government. So there is exclusion only by central government or state government. So what happens to a subsidy given by any other entity? Here, ABC Inc. is a parent company. This example is an example from Ford Motors case. Supreme Court judgment in case of Ford Motors, which dealt with valuation under customs law. Where the price was under, the money which was recovered from the customer has been compensated from the parent company. So here they're saying that the parent company, that is ABC Inc., is giving a subsidy of 20,000 for every motor vehicle which is sold, by this Indian entity. By virtue of this particular 15 subsection 2 clause E, we would say that answer by virtue of section 15 subsection 2 clause E, any subsidy directly connected with the supply other than from central government or state government shall form part of supply. Accordingly, rupees 82,000 collected from customer and rupees 20,000 subsidy received from ABC Inc. Shall be the value of supply. That is rupees 1,02,000. On this 1,02,000, 28% would be the rate of tax. I would be charging. Mansa, hope you got the clarity in relation to value of supply, in relation to subsidy, directly connected with the supply. Hope this is clear, Mansa. Let's move on to second question. The question is, XYZ and Co. employer recovers rupees 20 per meal from the employee for consuming food from canteen. Contractor who supplies food to Mrs. XYZ and Co. charges rupees 40 per meal. Per meal. Examine the GST provisions relevant for money recovered by Mrs. XYZ and Co. Mrs. XYZ and Co. So here, my question is, what is value of supply? Value of supply as per section 15. Now, can I accept rupees 20 or should I need to accept rupees 40? Or should I need to accept rupees 40? Now, this is a question, some portion in relation to our section 15, read with some rules which are yet to be discussed in today's class are to be read together. Let us understand section 15, how do we apply before we travel to valuation rules. Let me get an answer from some of you and then I'll discuss this particular provision. Discuss this provision. Geeta, 82,000, your explanation is correct, but your value you've given is 82,000. Hope this 1,02,000 is clear for you, right? Aniket, you have overshooted your value. Just think for a while, Aniket. Just think for a while. And Shailesh Mane, hope you also got this answer, ma. It's not 82K, it is 1,02,000. Hope this is clear for you. Sorry. I'll just come to the Word document. Yeah. There is a problem. Let me just share back the screen. Okay. I've got good answers. Aniket says 40. Shailesh, okay. Geeta also says 40 is the value of supply. Now, why 40? Why 40? What would be the reason? What would be the reason? Why 40? What would be the reason? What would be the reason? Look at this subsection 1. The value of supply of goods where they are talking about this. Please come to page number 6.8. Page number 6.8. There's a reference to price when they're talking about something called supply of goods and recipient of the supply are not related. Now, when we talk about this relationship, when we spoke about relationship, we also discuss this definition of related party. Come to page number 6.10. Come to page number 6.10. In 6.10, there is a relationship under clause 3. Such persons are employer and employee. When employer and employee is there, my rupees 20 is not my transaction value as per section 15, subsection 1. So answer as of now, the question says, let me just come here. Question says that 20 rupees is recovered per meal from the employee. Can this 20 be accepted as transaction value because employer and employee are related party transactions? Clause 15 subsection 1 does not accept this 20. Should this 40 rupees be transaction value? Answer for this we get when we travel to respective valuation rules. So this I'll park answer for 30 minutes down the line where I'll give you a clarity in relation to the valuation rules. So answer for this question would be rupees 20 is not to be considered as transaction value by virtue of section 15, subsection 1, considering the explanation provided for related party definition. Because employer and employee are considered to be related party, I would not accept 20 rupees as my transaction value. Since I have not covered valuation rules, though your answer 40 is correct, I'll give little more clarity once I explain the respective. Let us look at third question. Discount offer 25% off on 2 shirts purchase. As to provisions of section 15, there are 4 statements. I have to evaluate 4 statements and tell which statement is the right statement as per section 15. Now there is a discount offer. What does the discount offer say? 25% off on 2 shirts purchased. There is a discount of 25% when 2 shirts are purchased. Okay. This is the offer given by the seller. So what are the statements they have given? Statement A, allowable deduction from value of supply post the supply. They say that this discount is a allowable deduction from value of supply, which is called as post supply. Post supply. I'll say post supply deduction. Statement A says it is an allowable deduction. What is allowable deduction? This 25%, assuming 10,000 is the cost of shirt. 25% happens to be rupees 2,500. Statement A says this is an allowable deduction from value of supply. How? It is a post-supply deduction. This is statement A. Statement B says not allowable deduction from the value of supply if corresponding input tax credit is not reversed. So here, statement B says that this discount of 25%, that is, when a shirt is sold for 10,000, 2,500 rupees happens to be a discount. They say that 2,500 cannot be allowed until and unless the input tax credit is not reversed in relation to that discount. This is my statement B. Statement C. This discount is a allowable deduction from the value of supply when mentioned on the face of the invoice. Clause C, or rather statement C says this discount of 2,500 is an allowable deduction when it is mentioned on the face of the invoice. Then clause D, not to form part of value of supply because it is exempted from levy. Clause D altogether says a different dimension. It says that this discount is exempted supply which should not form part of my supply. What would be your answer? A, B, C, D. Which statement is correct when you read your section 15? When you read your section 15. Aniket says C. Okay. Ajay says D. Aniket says C. Abdul Rahim says C. Anish Joseph also says C. Mancha says allowable post supply. Good. I have mix and match. I'll come back to our institute material. in relation to discount. Please come to page number 6.9. Please come to page number 6.9. Please remember, a discount is discussed in your subsection 3. There is clause A, clause B. Clause A, which is given before or at the time of supply. Before or at the time of supply. If such discount has been duly recorded, if that discount is duly recorded, we call this as a trade discount. We call this as a trade discount. Clause B says after the supply has been effected. Now here, when you look at this example, what is the activity I have to do? I have to buy 2 shirts for what? To get a discount of 25%. So when a tax invoice is issued, it says purchase of shirt 2 pieces, assuming 10,000, discount 25%, that is 2,500. Value of supply will be 7,500. Now, this is how my discount works. When I go for billing, my seller says, sir, you purchase 1 shirt. To get a discount of 20%, you need to buy 2 shirts. Per shirt, it is 5,000. 2 shirts, it is 10,000. On the face of invoice, this seller will say, look, 10,000 is the cost. I'm giving a discount of 25%, whereby 2,500 happens to be discount. The net value is 7,500. This particular activity falls under, when I look at section 15, subsection 3, clause A, clause B. Clause A, on or before. This is on or before. On or before. My clause B is a post supply. So here, when I look at statement A, it is the allowable reduction of from value of supply post supply. Now, this is incorrect for the reason I'm not asking the customer to buy the shirt, come back after a point in time to give a discount. So because this is a post supply, this is an incorrect statement. Clause B, not allowable deduction from the value of supply if corresponding input tax credit is reversed. When I read section 15, subsection 3, under clause A, there is no reference to input tax credit, no reference to ITC. This reference to ITC has been discussed only in this clause number 2, where on the basis of document, input tax credit has been reversed. This was discussed in clause B, subclause 2. By virtue of this reason, my statement B is also incorrect. A is incorrect, B is incorrect. Clause C, it is a allowable deduction from the value of supply when mentioned on the face of invoice. This perfectly matches with section 15, subsection 3, clause A. Clause D says not to form part of value of supply because it is exempted from levy. There is no exemption. Because of this reason, my answer would be clause C. This is my answer to question number 3. Let's look at question number 4. Supplies on which recipient makes the payment on behalf of the supplier has to be forming part of value of supply. True or false? Supplies on which recipient makes the payment on behalf of the supplier, then that has to be forming part of value of supply. So they're asking, when the recipient has made the payment on behalf of the supplier, so that particular amount should form part of supply. True or false? If it is true, what is the reason? If it is false, what is the reason? True, true, true. All answers are correct. Geeta, Mansa, Anish, and Balaji. Here, we will Fall back to 15 subsection 2, page number 6.8, where clause number B. Clause B clearly says that any amount supplier is liable to pay in relation to such supply, but which has been actually incurred by the recipient. So this has to be forming part of my supply. So answer would be true. Last question for the day. I'll take up let me take fifth question itself. Fifth question. Supplier of goods gives a suggestion for the available GTA service providers for picking the material on behalf of the recipient. Transportation charges paid by such recipient shall form part of value of supply. True or false? I repeat the question. Please listen carefully. Supplier of goods gives a suggestion for available goods transport agencies, that is the service providers, for picking the material on behalf of the recipient. Transportation charges paid by such recipient shall form part of such supply. True or false? True or false? My recommendation, read little carefully. Anish says true, Manan says true. Okay. I'll wait for one more answer. But see, are you looking this 15 subsection 2 clause B and saying or clause C? Please, I would recommend wait and watch for your answer. Why it should be true, why it should not be true, or rather why it should be false. I have a other answer. Aniket says false, Geeta says false, Rahim says false, Mansa also says false. Very good. Here, please look at the question carefully. Supplier of the goods gives a suggestion. Supplier of goods gives a suggestion. See, the goods are sold. These are the list of service providers who are into GTA services. They can pick the material on behalf of the recipient. This is a catch point for your answer. This is a catch point. Now, when I look at my commercial terms, X works or CAF. Now, this could be a transaction where it is an X works transaction and not a CAF transaction, where recipient picks the material. Pick up the material from seller. So in this case, just because there is a service providers, that is GTA, made known to the recipient, I cannot blindly adopt my provisions of 15 subsection 2, either clause B or clause C. These two are incorrect. So here you would say this statement is false. You would say this is false. By virtue of services provided by the GTA received by the recipient is nothing connected with my value of supply. This would be your answer. Hope this is clear, students. Let me start with my value of valuation rules. Just give me a minute. I'll share my slide. Valuation rules, chapter 4 of CGST rules 2017 covers with valuation rules. We have in totality 27, rule 27 to rule 35. There are two new rules which are added recently. I'll touch upon with respect to your actionable claims, actionable claim, and your horse betting. Sorry, not horse betting, casino. Casino actionable claim in relation to online gaming, in relation to online gaming. These two sub-rules have come with effect from Rule 33, have come effect from 1st October 2023. These two are not there in your study material. I have covered in my slides. End of October, Board of Studies is going to come with a compendium of all the amendments which are effective, which are made applicable for your May 2024 attempt. Please keep in mind when you are writing examination in May 2024, all the amendments up to 31st October 2023 shall be relevant for your May 24 examination. Since we are on 26th October, this compendium is not ready as of today. The institute material which is available for you to download has not included these two valuation rules. I'll make you to cover, wait and watch. For sure, one question for 2 marks is going to be touched upon these two valuation rules for your May 2024 attempt. Rules to be harmoniously applied in order to their numbering. That means I'll go in the chronology of Rule 27 till Rule 35 for finding an answer where I fail to determine valuation, that is the transaction value under section 15, subsection 1 to subsection 3. When these three subsections are failure for whatever be the reason, or I'm not able to apply these particular sections, I'll come to my valuation rules. Government to notify the rules on the recommendations of the council. Now, this is one activity which is an ongoing activity where GST Council is the helm of affairs, where the recommendations are made by GST Council that would be notified by central government and respective state government or union territory. So all the state governments or union territory are going to notify these rules on the basis of recommendations made by the GST Council. To start with valuation rules, rule number 27. I'll give you a backdrop why we will discuss this rule 27. Just give me a minute. Let me give one slide. Yeah. When I talk about rule 27, rule 27 starts in the chronology. Now, why do I come to rule 27? My background, why I have to travel to rule 27 is section 15, subsection 1 is a failure. Now, why is that a failure? One is in relation to price, not a sole consideration. Second reason, this is a related party transaction. In case if price is not sole consideration, then I adopt rule 27. If it is a related party transaction, rule 28 or rule 29. This is how I apply my rules. I repeat my point once again. When I fail to find what is my value of supply, that means to say my transaction value is not accepted, I will keep aside section 15 and I'll come to either rule 27, rule 28, rule 29. Now the technical point here. When we read as a theory, it's always easy for faculty or the teachers to explain. So when there is a failure of section 15, you will come to rule number 27. The basic moot point. So How do we identify? How do we identify? How do we identify that the transaction value not to be accepted? Not to be accepted as per section 15, subsection 1. Only when you as a consultant, when you as a chartered accountant, when you as a professional, when you know that this transaction value cannot be accepted, then you will travel to valuation rules. So the route here would be first understand business model. Understand the business model. When I say understand the business model, I give this example this way. I'm into sale of consumable goods where there is a exchange offer. There is a exchange offer. I'll give an example. Most of you would have a two-wheeler or four-wheeler at your home. When you go to replace your battery for a motor vehicle or car, or replace a tire, let's take for a moment your battery of bike is drained out. When you go to this shop, the shop fellow says, so 4,000 is the battery cost. If you give your old battery, I'll give you a concession of rupees 500. Similarly, let me give another example of a tire. When you go, like assuming you want to buy a new tire for your bike. When you go to the tire shop, the shop fellow says, so 3,000 is the cost of tire. Because you are giving old tire, I'll give you a concession of rupees 200 rupees. So here what is happening? Price is not the sole consideration. I'm not getting money alone. For that reason, I would call this business where transaction value cannot be accepted. Second, you have a exchange or barter system. You have an exchange or barter system in a transaction. Now, you have various statistical tools. Statistical analytical tools. One of them is, say, your CAT audit tools, where you try to export the sale register, you try to apply some various conditions, and you analyze particular part or else a part code at the same economic level. There is a variance of 20%. Now, what you will do, assuming that there is a part code RM2412. This is my material code, where customer 1, customer 2, customer 3, customer 4. You made a statistical analysis, where for customer 1, you sold for 100 rupees. Customer 2, you sold for 102 rupees. Customer 3, you sold for 60 rupees. Customer 4, you again sold for 58 rupees. Where your statistical, this tool will say, examine these two particular samples. Examine these particular samples. Why? There is a price variance of this particular commodity alone compared to other commodities sold to a particular customer. Now, when you examine actual facts of the case, you are doing a barter system. There, I don't accept the transaction value. Rather, you as a professional, you'll say, so please examine rule 27 and see what is my actual value of supply. This is how I travel from transaction value to value of supply. Students, please keep in mind, this learnings what you're going to study are going to put you in a particular fulcrum where you are expected to learn, expected to understand how to advise a business. You're studying your business accounting, you're studying your auditing, you're studying your income tax, indirect tax, and legal costing papers. Once you travel slowly to the helm of FIs, When a business proposal is given by sales and marketing, you are expected to know how indirect taxation works to identify what is my value of supply. I continue this discussion with this example like this. Assuming customer 1, customer 2, customer 3, customer 4, date and money collected. Say date is 11th April, 12th June, 4th July, 5th, 10th January. On these dates, my money collected is assuming 10 rupees, 10 rupees, 8 rupees, 6 rupees. Now, here there is a barter. Here also there is a barter system. Now, what I have done, what was the money collected? On this money collected, I have collected GST at the rate of, say, 12%. This is what I have done. This is what I have done. Now, when I say barter, like let's take example, in case of customer 3, I bought an item for rupees 2. Customer 4, there is a service received for rupees 4. Now in customer 3's case, customer 4 case, the sales and marketing team or your supplier purchase department comes and says, so let's do this way. Instead of customer making the payment of 10 rupees, we'll ask him to supply the goods for 2 rupees. I'll supply the goods for 10 rupees. Let's net off and collect only 8 rupees. Now, please keep in mind, you as a future chartered accountant, when you're sitting at the helm of affairs as CEO or CFO, the triggering point in your mind should be valuation. Under GST law, though my bank statement where there's a collection of 8 rupees, I need to notionally add 2 rupees. I need to notionally add 4 rupees by virtue of rule number 27. This is what is discussed in your rule number 27, read with section 5. Are there any questions? Mansa, very good question. There's a question from Mansa. She's asking, sir, is there any difference between game of chance and game of skill? I will hold this particular question, Mansa. When I come to rule number 33, the newly inserted rule with effect from 1st October 2023, I'll touch upon this question and clarify in detail. Okay. So far, so good. I'll continue with this rule number 27, where it says, okay, I gave examples. I'll come straight away to the provision. Rule 27 says, value of supply of services where consideration is not only in money. I don't collect everything in money. The value of supply shall be the open market value of such supply. One, they say, please take the open market value. If open market value is not available, under clause A, sum total of consideration money and any further amount in money as equivalent to the consideration not in money. So they're saying that first find out what is my market value. How do I find out market value? We have discussed the definition of market value where your institute material give a detailed example on this market value. Let me just quickly come to this definition. Yeah, page number 6.5. This diagram has explained in detail where the money collected or money recipient is required to pay at or about the same time of like kind and quality of same commercial level. Wherein in our example, we had this customer 1, customer 2, customer 3, customer 4. That would render as a market value. So what if I don't have that market value? Then market value is nothing but, if this is not available, sum total in money. What you have collected in money, please add to that such further amount in money which is equivalent to the consideration not in money. So here, in case of your customer three, I have said 8 rupees is what I have received in money, and I received goods worth 2 rupees, which is not in money. So here, what this clause B says, because you know only 8 rupees, for 8 rupees, whatever 2 rupees value of goods you have received as barter, please add that particular thing. So what if this is also failure? I have an extreme case where I don't know value of the goods which my customer is giving for 2 rupees. Then they say, if the value is not possible under clause A or clause B, the value of supply of goods and services shall be of like kind and quality. Of like kind and quality. Now, I know market value. Now they're asking, find out like kind and like quality. I'll just give one example at this point in time, which will help us to understand this in a better fashion. Like kind and quality. Like kind and quality. Now, where there is no market value, they're asking, please examine like kind and quality. Please keep in mind, this is something which this reasoning is going to help you when you get a question from the income tax or customs or GST officer. Now, I'll give an example of a laptop, say, sold by Dell, laptop sold by Lenovo. I'm a dealer where in my shop, I sell Dell laptop, I sell Lenovo laptop. Now, when I look at the features, say size, 16 inches, 16 inches. Processor, say i3. Then your hard disk, 512 GB, 512 GB. Color, say black, and here I have silver. Now here I call the laptop sold, which is a make of Dell, the laptop which is a make of Lenovo, assuming this price is 42,000 and this price is say 40,000. Clause C says that when you don't have this as comparable under clause A or not under clause B, then under clause C, you can adopt rupees 40,000 as your transaction value. This is what explained in my Rule 27, clause C. Clause D. So I fail under clause A, under clause B, under clause D, C. Then they say saying that don't worry, please go for valuation rule under Rule 30 or Rule 31. Rule 30 or Rule 31. What we will do? We will park this Rule 30. We will park Rule 31 for 15 minutes right from now to understand in a better fashion. Reason? When I read Rule 27, when I read Rule 28, when I read Rule 29, if I'm not in a position to get an answer from these rules, I travel to these valuation rules, that is Rule 30 or Rule 31. So for that reason, I would recommend please park this Rule 30 or 31 somewhere. I'll explain you in detail how it works in Rule 30 and Rule 31. Now, let me see if any dots so far under rule number 27. I'm going pretty slow to make you a better understanding of these provisions. Open market value, we have discussed the definition. Like kind and quality, again there is a definition under Rule 27. This is a definition which is covered under Rule 27. Any other supply made under similar circumstances which is same, which is closely or substantially resembles in respect of characteristics, quality, quantity, functionality, reputation of the supply being valued. Now, these are the factors relevant for my like, kind, and quality. This is what I take from rule number 27. This is taken from our institute material where it says, when I look at my section 15, subsection 1, there is a rejection for this particular transaction value, maybe on account of price. Please travel to rule number 27. Examine rule number 27. When I examine rule number 27, sub rule 1 says, please take the market value. If the open market value is not available, then examine something called monetary consideration plus monetary value, which is not in consideration. If this is also failing, then examine something called like, kind, and quality. If these three are failing, then I'll travel to rule 30 or rule number 31, where 110% of COGS or reasonable means under rule 31 is prescribed. This we will discuss in detail a point in time, 5 minutes at 15 minutes from now. I gave a couple of examples to understand rule number 27, where a new phone is supplied for 20,000. A new phone is supplied for 20,000 rupees. Rupees 20,000. Along with exchange of old phone. But the moment I say exchange of old phone, my transaction value has to be set aside. If the price of new phone without exchange is 24,000, if the price of new phone without exchange is rupees 24,000. Now, when I say 24,000, this happens to be my market value, which is covered under clause A, rule 27, sub rule 1. The open market value of new phone is 24,000 rupees. This is my answer for open market value. Clause, second example, where a laptop is supplied for 40,000 rupees. Rupees 40,000 is the money received for sale of laptop, along with barter. The moment there is a barter, section 15, subsection 1 fails. For a printer that is manufactured by the recipient. So there is a barter of a printer exchanged by the seller, where the value of printer known at the time of supply. That is, the value of printer is rupees 4,000. 4,000 happens to be my value of printer. Then my open market value is rupees 40,000 plus 4,000, which happens to be 44,000 under rule 27, sub rule 2. This is my answer for value of supply. This is my value of supply under rule 27. Let me see if there are any doubts before I start with rule number 28. So first of all, no doubts. Let me start with this example. Rule number 28. Rule number 28, I'm talking about, this comes into picture where transaction value under section 15, subsection 1 is not accepted, The second ground for non-acceptance is related party transaction. Related party transaction. Let me come to our institute material. Page number 6.10. Please come to page number 6.10 of institute material, where they have given for the purpose of this act. Now they have defined A, B, C. Sorry, A, B, C, of which A is relevant, where there is a relationship. B, the person who also includes legal persons, blood relation. C includes the persons who are associated in the business of another sole agent or sole distributor. Even the agent is explained to be a related party. So by virtue of these definitions, which is covered in page number 6.10, I would say I may not accept my transaction value. So here, your list given under explanation. Now, so how do I get to know where the transaction value need not be accepted or should not be accepted? One, your notes to accounts of financial statements, where I give a disclosure of related party transaction. Disclosure of related party transaction, where I talk about forex earned and forex expended, forex inflow, forex outflow on account of this related party transactions. Also, I give my list of goods and services or engagements in related to the related party transaction. This is one example, or one source where related party transactions are surfaced when you look into the business model. Second, I would get to know by way of examining reinvestment or recovery from employee. Please look at your example. When I talk about this example, one is say canteen expense. Sorry, there is a power droppage. Let me just come back. Yeah. One is in relation to canteen expenses. Second is in relation to, say, transport, employee transport. Now, these are certain examples where when I review the profit and loss account, when I review the expenses account, I have to have a debit on the expense side. I have a credit on the expense side. Like out of 40 rupees I pay to the supplier, catering fellow, I recover 20 rupees from my employee. So I give a credit of the 20 rupees to my canteen expenses. That could be a scenario where related party transactions are surfaced from this particular transaction. Third, look at your business model. Look at your business model. On examining the business model, where you have agents or commission paid, where supply takes place through agent or dealer, then I would set aside my transaction value. I would come back to my valuation rules. These are the reasons why I would travel to my rule number 28. Now, examples to understand rule number 28. ABC Limited as manufacturing plant in Tamil Nadu. Supply of goods undertaken from Tamil Nadu to Kerala, Haryana, Maharashtra to various customers. Sale from Tamil Nadu to an independent customer per unit is say rupees 28,000 and inter-unit stock transfer is rupees 14,000. Now, when I talk about this example, I'll give an example of rule 28 this way. Under section 25, I consider person having registration in different state or union territory, having same PAN, or called as distinct person. This distinct person also is considered as related party for the purpose of your section 15 explanation which is provided. So here I'm giving an example of this case where the manufacturing activity happens in Tamil Nadu. Sale to customer happens from Tamil Nadu, Kerala, Maharashtra, Andhra Pradesh, say Bihar, etc. Now, in this case, my rule 28 comes into picture where transaction value will be set aside. That is what I'm trying to explain this particular example. So here what they're saying, when I sell to a outside customer, I collect 28,000. When I sell to my branch, that is stock transfer, I consider rupees 40,000 as my transaction value. So we'll understand rule 28 in a while to know what does it say. Rule 28 says that my value of supply of goods or services between distinct or related persons other than through agent. So here, agent is covered in rule number 29. Rule number 29. Here they say, if the sale happens between distinct persons or related persons. Please understand, the term distinct person is covered under section 25, which deals with your registration chapter. When I come to registration, I'll explain in detail this terminology of distinct person, why I ought to take registration in various states. All the background on registration, I'll explain in detail. At this moment, we need to understand distinct person or related party. I examine the value under rule number 28. Let me just see if there are any questions. Students, it is advised to have your valuation, institute material in reference to valuation rules, what I'm discussing. Let me just come to my institute material. Yeah. Rule number 28, page number 6.30. Wherever I'm giving examples from my presentation, please make a running notes in your institute material. I'm talking about page 6.30, rule number 28. The value of supply of goods or services between distinct person as specified under section 25, where supply and recipient are related other than where supply is made through an agent shall be clause A, it should be open market value. Like we discussed under rule 27, first and foremost, they say, please examine. Does it match with your open market value? If the open market value is not available, the value of supply of goods of like kind and quality. Like what we discussed in rule 27, same copycat in rule 28. Go with open market value. Sir, I don't have open market value. Then like kind and quality. Sir, I don't have even both A or B, or say the market value is not there or like kind of quality is not there. If the value is not determinable under clause A or clause B, then value has to be determined as per rule 30 or rule number 31 in that particular order. There is a proviso to rule number 28 where it talks about before going to rule number 30, rule number 31, please examine the proviso. What does it say? Provided that where goods are intended for further supply as such by the recipient, then value of supply shall be at the option of the supplier be amount equivalent to 90% of the price charged for the supply of goods or like kind or quality by the recipient to his customer being a related person. First provision says I'll choose 90% of the value, 90% of the price charged of the supply of goods of like kind and quality by the recipient to his customer. Whatever the value is charged by the recipient to his customer, I'll take 90% of that value. Second provision, provided further where recipient is eligible for full input tax credit, value declared in the invoice shall be deemed to be the open market value of goods or services. This is the crux point where Most of the stock transfers come as a rescue when we talk about related party transactions. I'll explain in detail these provisions this way. First, I talk about first provision. My first provision, my first provision says that, assuming that supplier, branch, customer. Say, scenario 1, supplier is in Tamil Nadu. Supplier is transferring to his branch in Maharashtra. My branch is selling to a customer who is also there in Maharashtra. My supplier is charging rupees 10,000, is charging 10,000 as a value to the branch which is there in Maharashtra. Maharashtra is charging rupees 20,000 as a price to the customer, ultimate customer, say B2C in Maharashtra. Under first proviso, they say this transaction value may not be accepted. Rather, as per your rule number 28, sub-rule 1 proviso 2 sub-rule 28, it says 90% of the value of rupees 20,000 should be considered as transaction value. 90% of 20,000 happens to be 18,000. This will be considered as my value of supply under provision number 1. This is what is discussed first provision. Now, this first provision is superseded by second provision, where the second provision says, let me just come to institute material. I'll just read for you once again to explain this in a better fashion. Look at your page number 6.30, where it says, value of supply of goods or services between distinct or related persons. A, B, C. A happens to be market value, B happens to be like kind and quality, C happens to be under rule 30 or rule 31. Provision says, I'm talking about first provision. Provided that where goods are intended for further supply as such. When goods are intended for further supply as such, by the recipient, the value of supply shall, at the option, there's an option given of the supplier, be an amount equivalent to 90% of price charged for the supply of goods of like kind and quality by the recipient to his customer, not being a related person. So whatever the price recovered in our example, I was giving this example where when branch is selling to a customer, this transaction is an unrelated party transaction. Because rupees 20,000 is being recovered, they say 90% of rupees 20,000 happens to be my value of supply. This is my first provision. Second provision. Provided further where recipient is eligible. They're saying that recipient is eligible for full input tax credit. Value declared in the invoice shall be compulsory, shall be deemed to be the open market value, a DV provision. I'll come back to my presentation. Second provision, they're saying that this first provision, please keep in mind, when I talk about first provision, this is optional. Okay. Second provision says, So when you look at seller, when you look at the branch, and when you look at your customer, I was giving examples in scenario 1. No? Tamil Nadu is the place from where seller is transferring. Branch happens to be in Maharashtra. Customer is also in Maharashtra. The price from Tamil Nadu to Maharashtra is rupees 10,000. The price from Maharashtra to customer is rupees 20,000. Rupees 20,000. Here, the question comes in second provision at Maharashtra. Examine whether branch can claim input tax credit. If answer is yes, if answer is yes, if answer is yes, if answer is no. If answer is yes, accept rupees 10,000 as transaction value. Accept rupees 10,000 as transaction value. If the answer is no, I will travel back to clause A or clause B or clause C or first provision. This is how we will give the transaction value examining the benefit of input tax credit at particular branch. This is what we do in relation to valuation. Now, if you are wondering, this is so complicated, please keep in mind, you as a chartered accountant, when you get qualified, when you join a company or when you get into practice, your advice is going to be very, very valuable. And you're going to assess the assessee, in departmental GST assessments. That point in time, you are expected to learn these provisions, right? That's why your degree of chartered accountancy is valued very, very much in relation to understanding the complicated transactions, applying the provisions, and giving an answer. What does the law say, and what is the right practice to deal with this particular subject? Hope this is clear, students. I'll give one more example with respect to second provision. Let's take one example this way. Say I'm a tractor manufacturer. Now, this particular tractor, if I sell to agricultural activity, I'm just giving a hypothetical example. Agricultural activity, then this is exempted. Say government has given a particular mechanism where if the tractors are sold to agriculturists, then it is exempted from GST. Now, for a moment, let me assume this way. Tamil Nadu is a place where I do manufacturing activity. Then Punjab is one more state where I do my manufacturing activity. Okay. Sale happened through Tamil Nadu, sale happened through Andhra Pradesh, sale happened through Punjab, sale happened through, say, another example, Bihar. Now, I make a strategy where all the sales from Tamil Nadu are taxable. All the sales from AP are exempt. All the sales from Punjab are taxable. All the sales from Bihar are exempt. That means to say, when I geographically distribute my sales, all east and north, all west and south, sorry, ulta. All east of India and north of India, all west of India and south of India. I make a strategy in such a manner that any customer who wanted a tractor to purchase, which is exempted, I'll say I'll supply from Andhra Pradesh. If any customer who wants to buy a tractor other than agriculture, I supply from Tamil Nadu. So why do I do this activity? For the benefit of input tax credit. I wanted to have a clarity with respect to taxation. I don't want to mess my business doing multiple no activities of sale and exempted from one location. Now I have a business model to strategize this sale. Probably that scenario where I examine second provision. For a moment, the sales made from Tamil Nadu to Andhra Pradesh. Tractor manufactured from Tamil Nadu sold to Andhra Pradesh, from Andhra Pradesh to end customer. Because Andhra Pradesh is not taxing, which is exempted activity, no ITC benefit is there. Because there is no ITC benefit, I would adopt my Rule 28, Clause A or Clause B or Clause C or first provision. First provision. That means to say, whatever value recovered from B to C, 90% of that value will be considered by Tamil Nadu for value of supply for charging GST. This is what we need to understand with respect to rule number 28. Hope this example is clear for you to understand, students. This is a ancillary provision under Rule 28. Unfortunately, no notification came as of today. This is just a entry under Rule 28. It says, as per valuation rules, the value of taxable supply services provided by notified class of service providers without any consideration between distinct persons is nil if ITC is available. This is just an ancillary rule. This is not notified as on today. Next is your Rule 29. Students, we are at 7:31. Let's have 10 minutes break. Let's resume back at 7:40. We'll continue with our discussion on valuation. Let me see if there are any doubts before we start with. There's one aspect which is connected with related party and also something to do with your valuation. I'll come to your institute material. There are a few examples which I've kept on hold to discuss at an appropriate point in time. Please come to page number 6.16. Yeah, 6.16. Please come to page number 6.16 of institute material. This is one aspect where circular was issued by the department to examine the value, whether value of supply made by a component manufacturer using molds, dies owned by OEM. Molds and dies owned by OEM. Now, this is one time tested under central excise era, which is also relevant for GST era. Now, most of you would have known what is a mold, what is a die. Mold and die. These are the tools which are used by the component manufacturer, which are used by this component manufacturer. Then I have one more customer called OEM, original equipment manufacturer. Example of OEM, say Honda, Maruti, etc. Now, it is like I wanted to have a particular pattern. I'll give a very good example with respect to this mold or die in relation to OEM. Let me give an example of MRF. Let me give an example of C8. Dunlop. Now, these are all called as OEM customers, original equipment manufacturers. Okay. Now, for a moment, I call these people as component manufacturer. Reason? I have a customer called, say, Honda. I have a customer called Hero. I have a customer called, say, Maruti. Now, these I'm calling as OEM. Now, Honda, Hero, Maruti, they would place an order on these suppliers, MRF, C8 or Dunlop, to supply tires to their motor vehicles. Now, when you look at these dies, they have a pattern. This pattern is something which is very, very unique for themselves. The pattern used by C8 will not be there for MRF. The pattern used by MRF would not be there by Dunlop. So these are the cases where we call a mold or a die which is used for manufacturing this particular pattern. This particular mold or die, scenario 1, scenario 2. Scenario 1, supplied by OEM. Scenario 2, this supplier has to source for manufacturing activity. In the sense, these customers, Honda or Hero or Maruti, when you look at these manufacturers, the tire which is used by Honda will not be suitable for Hero. The mirror, the side mirror or rear mirror used by Hero is not the same as Maruti. So they have something called this mold or die, which could be the ownership lies with OEM or the ownership lies with this component manufacturers. So when component manufacturers use their own die, this is called scenario 2. Scenario 1, the ownership of this mold or die is with OEM. So here they're saying that when FOC basis, FOC basis, the OEM is supplying this mold or die to this MRF CA 10 lakh. No GST is to be paid on that. It is not to be forming part of Section 15, subsection 2, clause B. Alternatively, if the mold or die should be purchased by the supplier, then this forms part of my 15 subsection 2 clause B. Let me read. As per this circular, it is clarified that while calculating value of supply made by component manufacturer using a mold or die which is owned by OEM, which is sent on FOC basis. This talks about scenario 1. The value of such mold and die shall not be added to the value of supply made by him, because cost of mold and die was not to be incurred by the component manufacturer and thus does not merit inclusion in value of supply. Alternatively, if the contract manufacturer and component manufacturer was for supply of components made by using mold or die belonging to the component manufacturer, but the same has been supplied by OEM to the component manufacturer on FOC basis, the amortized cost of such mold and die shall be added for components. So in scenario 1, if it is given on FOC basis by OEM person, not to be included. If this mold or die is in the scope of the supplier, then the amortized cost, they have used the term, amortized cost should be added for section 15, subsection 2, clause B. This is one aspect with respect to molds or dies, which is in relation to value of supply. Moving further. Rule number 29. Now, rule number 29 is in relation to supplies through agent. Supplies through agent. ABC Limited, manufacturer, that is, they manufacture cement, has appointed dealers across India. Now, how do I know dealers? Please look at your P&L account. In P&L account, when there is a commission paid, this is an indication that there is a principal agency contract. Whenever there is a principal agency contract, section 15 triggers in. Explanation to section 15, my transaction value, subsection 15.1 is not acceptable. Transaction value is not acceptable. I travel to rule 29 for agent related supplies. Value of supply of goods received through an agent. First, as usual, 27, 28, they say, let there be an open market value of goods. Or if you don't want open market value, at the option of the supplier, be 90% of the price charged for the supply of goods of like in quality by the recipient to his customer, not being a related person, where goods are intended for further supply by the said recipient. So here, option A, please adopt open market value. So, or 90% of the value to end customer. So here, it's a pretty transaction. Look, whatever market value say, I go with that. If not, 90% of the supply of goods of like kind and quality by the recipient to his customer. Whatever agent is supplying to the customer, 90% of that value we will take into consideration. One example for that. Principal supplies groundnut to his agent, and the agent is supplying the groundnuts of like kind and quality in subsequent supply at a price of 500. Like say principal, agent, and customer. Principal supplies groundnut to his agent, and the agent is supplying groundnuts of like kind and quality in subsequent supply at a price of 500 per quintal. Now, agent is supplying to his customer at rupees 5,000 per quintal on the day of supply. Another independent supplier is supplying groundnuts of like kind and quality to the same agent at the price of 4,550. The market value, this 4,550 is nothing but my market value. My market value indicated is 4,550. What do they say? Another independent supplier is supplying groundnuts of like kind and quality to the said agent. So this agent may buy from principal. This agent may buy from independent supplier. So here, this value they are indicating, it is 4,550. The value of supply made by the principal shall be either 4,550, that is your market value, or 90% of 5,000, or 90% of rupees 5,000, which happens to be 4,500. So this principal, when he has to charge GST, that is for value of supply, either 4,550 or 4,500, he can adopt for value of supply purpose. Now, so where do we have this Rule 29 used? All these your ITC products, your cement manufacturers, your FMCG products, these cases, Rule 29 is the predominant rule which is relevant for value of supply. So here they declare that, look, this is my dealer price. Now, when the principal is declaring this is a dealer price, the dealer is supposed to sell at a particular given price. So always what they do, 90% of dealer price is taken for consideration. This particular value is adopted for calculating what is my value of supply. Hope this is clear, students. So what if I fail to get a market value, or I cannot find the independent value for the like kind and quality supplied by the recipient? Then travel to Rule 30, Rule 31. This is a summary of your Rule 29, where they say open market value or 90%. If you fail, Rule 30, Rule 31. I'll come to Rule 30 and 31 now to explain what is the content of this. Rule 30 says where value of supply of goods and services are based on cost. Where the value of supply of goods and services are both not determinable by any of the preceding rules of this chapter. Rule 27, Rule 28, Rule 29. 27, price is not the sole consideration. 28, related party transaction. 29, agent. All these cases where I don't get an answer, then I'll travel to Rule 30, where it says the value shall be 110% of cost of production or manufacture, 110% of cost of acquisition of such goods, or 110% of cost of provision of services. Look at your cost of production based on your CAS 4. Find out what is your cost of production or cost of acquisition. On this, whatever is there, on whatever this cost of acquisition or cost of production or provision of service, whatever value you have determined, this into 110% is going to be my value of supply. For a moment, A purchases goods from B for rupees 10,000. And A in turn supplies these goods to C, who happens to be a related party. When I fail Rule 27, 28, I fail Rule 28, then I'll adopt Rule 30, where what I'll say 10,000 into 110%. I'll get 11,000 as my answer. 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 11,000 11,000 as my answer. So hope this is clear, students. This is my rule number 30. Pretty simple. Rule 31 is much easier than rule 30. What it says, now this rule 31 is used most of the cases where best judgment is to be adopted by the proper officer. Best judgment assessment. As when I go for when I fail for self-assessment, I go for best judgment assessment by from the GST officer, where they say value of supply of goods or services both cannot be determined. Rule 27 to 30, same shall be determined using reasonable means. What do you mean by reasonable mean? I have to have a collateral or comparable means, comparable value. I would say, sir, there is a special valuation bench report under customs. As per this report, value of imported goods is identified in a particular manner. That particular manner, if accepted by customs authorities, the same manner could be referred to GST authorities also. This could be one example where, sir, I don't have this COGS, cost of goods sold, or cost of acquisition. When I don't have this particular thing ascertained or acceptable, those cases I go for best judgment, which is on the basis of reasonable means. Example number 1. Example number 2. These days you would have heard something called fake invoicing. Fake invoicing, where I suppress or I issue tax invoice without actual supply. Now, fake invoicing may deal with actually issuance of a tax invoice without supply. Suppose for a moment, I'll instead of fake invoice, I'll come this way. Say section 67 of GST law, which deals with your search and inspection. Search and inspection. There is inspection from GST department where they have a reason to believe. They have a reason to believe that there is a suppression. There is a suppression. In these cases where Rule 31 may be adopted for identifying the value which is using a reasonable means. So whenever I have to find out a value, if the financials itself is a malified or suppressed information, I set aside financials. I don't go for determining values for financials. Rather, the reasonable means consistent with the principles of generally accepted accounting provisions of section 15, I take into consideration. This is what Rule 31 talks about. Generally, where we come across Rule 31, in case of the GST officer who undertakes this search and inspection, where he has all the reasons to believe the value is suppressed. This is where I use my rule number 31. Now, when you read this particular valuation rules, where you use these particular provisions, when you go to GST assessment, when you go for advanced ruling, or when you have something to do with your customs provisions, there these valuation techniques are going to helpful for you to explain, demonstrate, and understand how the law works to determine the value. Now, rule number 31A. This is rule 31A, which has come effect from 1st October 2023. Now, I'll give you the backdrop of this rule 31A and 31B, which is very important from May 2024 point of view. For the reason, this is a new rule which has come into effect from 1st October 2023. 1st October 2023. This rule has come into picture. I'll just give you a background. Just give me a minute. Value of supply in case of lottery, betting, gambling, and horse racing. Sorry, this rule 31 is an old rule. I'm pretty sorry. Rule 31A is an old rule. 31B, 31C are the new rules. 31A is the old one where in case of a lottery, betting, gambling, or horse race. Lottery, betting, gambling, horse race. Lottery, West Bengal or Kerala. If you happen to visit West Bengal or Kerala, lottery tickets is sold like as one of the major industry as such. Betting, gambling. Betting and gambling, most of the occasions we see this betting and gambling either in a casino or maybe in you can have some matches etc which are legal, some like the cricket matches or horse race where we have this totalizer who happens to be a book runner for conducting a horse race. The value of supply. What do they say? The value of supply of lottery shall be deemed to be 100 by 128% of the face value of ticket of or the price as notified by the official gazette. Face value of ticket or the face value or of the money price notified by the state government. So when I determine my lottery for lottery purpose, I examine what is the value of ticket or what is the price money of ticket. If the value of ticket is say 250 rupees and the prize money is say 275 rupees, then the provision says shall be deemed to be 128% of the face value of ticket or price value, whichever is higher. What I will do, this into 100 divided by 128, this into 100 divided by 128. Obviously, this is going to be higher. This value is going to be my value of supply. Examination, 2 marks valuation where they'll give you both ticket value and also prize money. Based on this, I have to calculate what is my value of supply. Because this is one of the sin game, they consider higher value for the purpose of GST. Let me just come to institute material just to show where we had discussed. Yeah. Rule number 31A, page number 6.48. Page number 6.48. They have given a couple of examples. Look at example number 25. Government of a state runs a lottery where face value of a lottery ticket is 250 and the price notified by the state government, that is the prize money, is 240. The value of lottery shall be either 250 into 100 by 128 or 240 into 100 by 128, whichever is higher. In this case, 195.313 happens to be my price value of supply under Rule 31A. Now, in case of actionable claim, that is betting or horse race, etc., they say 100% of the face value of the bet or amount paid to the totalizer. 100% of face value of the bet or amount paid to the totalizer. So here, generally it so happens when we talk about this horse race, like no, we have various horses which participate. We have a jockey on whom the betting generally happens. The total pool of the money collected by this totalizer. Totalizer is a person who collects money from the people who do the bet, and the total sum collected will be called as my value of supply. On that, the 28% is applied under rule number 31A. This Rule number three was challenged in Karnataka High Court, saying that my section 15 does not define this particular value. Can rule 3, rule 31A can define the value of supply. This was upheld by Karnataka High Court, saying that there is no ambiguity in rule number 31A, sub rule 3. This shall be considered as your value of supply. Now, new rule 31B, which has come into effect from 1st October 2023. This is what I was mentioning with respect to online gaming and online money aspect. Now, this is where one of our friend Mans has asked a question. So, what is this difference between? Let me just read the question for benefit of other students. Between game of chance and game of skill. What is the difference between game of chance and game of skill? I'll come to one definition, which is again inserted from 1st October 23. Let me just open that. There's one definition. Hope you're able to see my screen. First and foremost, when we look at this definition of actionable claim, when you look at this definition of actionable claim, this is pretty simple, where it says actionable claim shall have the same meaning assigned to it in Section 3 of Transfer of Property Act. So why this was prominence? Actionable claim is something which is neither goods nor services. Nor services. Now this was a triggering point in case of Gamecraft Solutions. Gaming Craft Private Limited. I'll just come to my PowerPoint presentation. This actionable claim is the first definition. Let me just come back to my presentation. There's one entity called Gaming Craft. Gaming Craft Solutions Private Limited. We had this game called Online Rummy. Online Rummy. In this Online Rummy, whoever wins, they get the prize money. They get the prize money. Now, honestly, I am not a person who have played these card games. I don't know how to play the cards. I'm just giving like whatever I have read from this case law. I'm just sharing my views on this particular online gaming example. So here there is a game which is conducted online. This particular entity says, "Look, I'm a entity who have a facility for what? For playing online game." Now, there is something else called, there is a like no, the differentiation which came from game and skill. It is a money for a chance, money for a skill. Money for game, money for skill. Now, Prize money for skill, prize money for chance. This rummy is defined, explained to Karnataka High Court. There is a battalion of advocates who have represented this particular gaming crafts in before Karnataka High Courts, where they say, my lords, the prize money received by a participant, this is purely by way of a skill. And this is called as actionable claim. They say, when you refer to the definition as per Property Act, the debt which is created by virtue of the definition explained under the Property Act, they call this as a money which is in terms of actionable claim. Money by way of a chance, they gave example of lottery, where under Rule 31A, already this aspect of lottery was defined to be a game of chance where the value of supply is defined. Now, all along, this government has felt that people are playing online rummy, but unfortunately, the CBIC is not getting any revenue from this particular activity. I don't, as I say, I have never played cards, but I've seen the television ads where Virat Kohli or this big famous celebrities have given an advertisement in relation to this play online rummy. This is one of the online mafia where money is minted by these portals. There are the software companies who develop a platform wherein they exchange money to participate in this particular rummy and they win the prize money. When we play these cards, the honorable, the councils who represented this particular SSC called gaming craft, they say, my lord, this is a game of skill. Like Arjuna, when he participated in a particular event to bag one particular Rani, he has to hit a fish looking at the the water kept beneath the fish. Like this is a game of skill. Every person will come and test their skill to hit a fish looking into the water, which is in the it is kept below the fish. Now that's called as a game of skill. When the game of skill is there, the money earned over there is purely defined or determined as actionable claim. Now, this particular aspect, Karnataka High Court said, yes, once it is an actionable claim, no GST is payable on this particular game of skill. If it is a game of chance, like lottery or your betting which happens in your casino. In a casino, there is nothing called skill. You just bet on a particular number. If you win, you get a prize money. So in case of a lottery, casino, etc., they say these are like your horse race also. These are all nothing to do with your actionable claim. Hence, this is taxable. Mansa, this is your thin line of difference. Game of skill versus game of chance. If it is a game of chance, it is not an actionable claim. If it is not an actionable claim, lottery, betting in a casino, horse race, etc. are taxable. Rule 31A already takes care of these aspects. What was defined to be actionable claim in this Karnataka High Court judgment in relation to gaming craft was to be an actionable claim. Once it is proven that it is not an actionable claim, then no GST is applicable. There came a game changer. Section 2, which deals with your definitions. By virtue of 107A, there was a definition inserted. Where is this? 102A, sorry. By virtue of 102A, there is a definition called specified actionable claim. Means actionable claim involved in or by way of betting, casino, gambling, horse racing, lottery, online money gaming. Now, this element of online money gaming is going to change the entire no, way this aspect of gamescraft decision was discussed. We were saying all along that when someone plays rummy, so this is not a sheer online chance, rather this is something to do with skill. But this particular aspect was defined to be a specified actionable claim. This is one change point which was introduced by virtue of Rule 31B. So in Rule 31B, what they have said, value of supply. They are identifying what is my value of supply in case of online gaming, including online money gaming. Online game, online money game. I play games online. I get money by playing games online. Now, the department has left no room for revenue recovery. If some of you remember 20,000 crores was the demand made on gaming crafts solutions. This money, if proven to be a demand by Supreme Court, Honorable Supreme Court, the net worth itself is not there to pay so much of money with the company. If they have so much of money, they would have minted crores of rupees. So all this online gaming industry is at like the dilemma whether this provision is going to be made retrospective or it is going to be made prospective. Wait and watch for May 2024 attempt. They would define a question where there is a company, including ABC Private Limited, who is providing this online gaming facility. Whether this activity is taxable, and if it is taxable, what will be the value of supply? So what you will do, you will refer to section 2, clause 102A, which talks about your specified actionable claims. Notwithstanding anything contained in this chapter, value of supply of online gaming, including supply of actionable claims involved in online gaming, shall be total amount paid or payable or deposited with the supplier, by way of money or money's worth, including virtual digital assets, including digital assets. Now, this is the first time where your virtual digital assets, which is more to do with your cryptocurrency, was also brought under the definition for the purpose of taxation. Let us see, I could have paid money, I could have paid the consideration through virtual digital asset. I'll just quickly come to this definition also. They have very simple terms. They have referred to Income Tax Act. Your clause 117A, which deals with your virtual digital assets. They say virtual digital asset shall have the meaning assigned to clause 47A of section 2 of Income Tax Act. Whatever is to do with your cryptocurrency, the same was brought for taxation even under GST. So here, my money or money paid through virtual digital assets are considered to be the value of supply for this online game, provided that any amount returned or refund by the supplier to the player for any reasons, including player not using the amount paid or deposited, shall not be deductible from the value of supply. They say once a participant comes and participates in online game, sir, my internet is gone, so my data is not there, sir, I didn't participate in the game, please refund my money. They say nothing doing. This is considered with the value of supply. Once I determine that this is value of supply, GST is something which they wanted to live in. Section 7, read with. Section 15, read with. Section Rule 31B, read with Rule 31B. This is going to be the new propaganda with effect from 1st October 23 for online gaming. Online gaming. What is the rate of tax proposed? The rate of tax proposed is 28%. Mansa, are you clear with this online gaming skill and chance? What is the difference between online gaming and online chance? Are you clear with this both aspects, Mansa? Abdul Rahim is asking this. GST notice received by Delta Corp. It is related to 31B. All these online gaming aspects are connected with this one. Online Rummy, online Jingli, or any other, different portals are there. Honestly, I don't play. I have zero knowledge on this card business. But whatever you heard about online Jingli, online Rummy, they are connected with this Rule 31B. Next, Rule 31C. Rule 31C. This is again a new rule which has come from 1st October 2023. This is again not included in your institute material. Post October, you'll get a small bulletin published by Board of Studies where you'll get the benefit, the clarity on 31B and 31C. 31C says the value of supply of actionable claims in case of a casino. They say in case of a casino, actionable claim shall be total amount paid or payable by the purchaser for tokens, chips, coins, tickets, by whatever name called, or participating in an event including game, scheme, competition, or any other activity or process in casino. In case where token, chips, or coins by whatever name called are not required. In casinos, they wanted to fix this particular value of supply. Very simple. They say whatever money collected, this money collected has been defined to be called as my value of supply. So what if the money is written back? Sir, I purchased 10,000 worth coins. I played for 8,000. I lost 8,000. I went back to this token counter and said, I'll give you back the coins for 2,000. Please refund me the balance 2,000. They say once you've sold coins for 10,000, once you have issued a receipt voucher, you cannot net off the 2,000 and say only 8,000 is the value of supply. That is what they have said. Explanation. For the purpose of Rule 31B and 31C, amount received by the player by winning an event, including a game, scheme, competition, etc., which is used for further event without drawing that particular money, it shall not be considered as amount paid for the game, etc. For a moment, let's assume that level 1, user 1, has to pay 5,000 as entry fee. 5,000 as entry fee. The winning price is say 10,000. Is 10,000. Level 2, the entry fee is say 7,500. The entry fee is 7,500. Now here, users can come through level 1, come through level 2, etc. So here, this particular rule 31B and 31C says, whenever user is participating, when he pays 5,000, entire 5,000 is going to be a value of supply. For a moment, the participant has won 10,000 rupees. When he travels to level 2 and this money is used over here, they're saying that because this is a winning fee which is used at level 2, this is not considered to be a value of supply by virtue of this explanation. They say, for the purpose of Rule 31B and 31C, amount received by a player by winning any event, including a game, scheme, competition, or any other activity or process, which is used for playing the same play by the player in a further event, without withdrawing shall not be considered as a amount paid or deposited with the supplier by that player. So here, this money will be taxed only once and will not, any prize money which is used subsequently will not be considered for taxation. That is what they have clarified. Next, Rule 32. Rule 32 deals with 5 mechanisms. One is booking of Rule 32. I'll just brief in a short manner. Rule 32 is an ancillary rule derived from Section 15, subsection 5. where government has authority to formulate rules for determining the value of supply. First, they have used in relation to foreign currency transaction. I'll explain the aspects in this particular rule so that it will be easy for you to remember these provisions. Let me just come to institute material. Yeah. Page number 6.49 of your institute material. 6.49 of institute material. First aspect, they have dealt with your sale or purchase of foreign currency. Sale or purchase of foreign currency. Now, what is the importance of this foreign currency? What is that we have to understand from this particular provision? Is where I'll give an example this way. Let me just use a new slide. Just give me a minute. Saying foreign currency. Foreign currency, is it a money? Answer would be, when you look at your institute material, they clearly say that. Let me just come back. Money, page number 6.6. Page number 6.6. Money means Indian legal tender or any foreign currency. Or any foreign currency. Now, this money includes this foreign currency. Once I say money, money is neither goods nor services. But what we have to understand is supply of service in dealing with money is taxable. Supply of services in dealing with money is taxable. This is what they have explained. I don't tax money directly. Why? Money is neither goods nor services. But they're saying that when you deal with supply of services in relation to money exchange or money services, it is taxable. Example. So I have to import a machinery. I wanted to make the payment to the seller. I want to make payment to the vendor. I don't trust the vendor. The material may be in a damaged condition. Then we have this mechanism called letter of credit. Letter of credit. My banker in India gives a LC which could be furnished to the banker of the supplier, where once the goods are supplied in good condition, acceptable as per the agreement, my banker in India remits the money to my counterparty vendor's bank account. So here, for doing this LC, banker charges some nominal charges. That charges is use of money in various forms. One of them, converting foreign currency to INR or crisscross. I convert foreign currency to INR or INR to foreign currency. Usage of this foreign currency conversion is something which is being taxed. This usage is being taxed. So this is what my entry number rule 32 talks about this particular foreign currency. Now, when I talk about this foreign currency, say for a moment, ABC Private Limited. ABC Private Limited. They have a customer in US where plant and machinery has to be installed. Now, the engineers of this company have to travel US for doing this installation activity. For their travel, for their food, accommodation, and other incidental expenses, they need some $10,000. $10,000. So what will happen? ABC Private Limited, they approach to the bank who happens to be an authorized dealer. This particular banker will say, you wanted $10,000, right? So I'll charge per dollar 84 rupees per dollar. This is the conversion rate. So what this company needs to do, $10,000 is required, 84 rupees is per dollar, rupees INR 84,000 is paid. Rupees 84,000 is paid. Wherein the RBI rate is rupees 82. Rupees 82. Now what is happening here? The bank is adopting the RBI rate, but he is selling at a price called rupees 84. The gap between this 82 and 84, the 2 INR, 2 per dollar, is a commission earned by the authorized dealer. So since they have exchanged $10,000, 2 into 10,000, I get 20,000. 20,000 happens to be the commission earned. Am I in the right direction? No. Sorry, I did a small correction. 10,000 into 84, 8,40,000. 8,40,000. Yeah. For 8,40,000, banker, authorized dealer is going to earn 20,000 as commission. Now, this is what is being considered as value of supply, or Rule 32 comes and gives various permutations and combinations how the foreign currency activity is being considered for determining my value of supply. Let me come to your institute material. Please come to page number 6.50. Page number 6.50, where they say transaction where one currency is exchanged in Indian rupees. Now, my company in India goes to the bank. They give INR for 4,80,000 to get 10,000 US dollars. This is a case where my banker has a choice to pay money, the transaction value. RBI reference rate for currency is not available. Then value of supply will be 1% of the gross amount. 1% of the gross amount. Let me explain the provision. I think I jumped ahead of the provision. Value of supply in relation to purchase and sale of foreign currency. Let me just check. I think I skipped the rule somewhere. Yeah. Rule 32 in relation to foreign currency. Yes. Page number 6.32. Page number 6.32. In relation to foreign currency, value of supply in relation to purchase or sale of foreign currency. Purchaser, clause A, for a currency where when exchanged from or to Indian rupees, value shall be equal to difference in buying rate or selling rate, as the case may in Reserve Bank of India reference rate for that currency at that time multiplied by total units. So here, clause A says, look at your RBI rate, look at your authorized dealer rate. The gap between these two multiplied by number of units. This shall be considered as my value of supply. In the example which I gave to you, assuming I just come back to my PowerPoint presentation. In the example I gave to you, my Reserve Bank of India rate, is 82. My authorized dealer rate is 84, is rupees 84. So here the gap between 84 and 82 is 2 per dollar. So the value of supply will be the gap into number of units. Since I purchased $10,000, 20,000 happens to be my value of supply. This is as per my rule 32. Clause B. Provided that in case RBI rate is not available, provided that in case where Reserve Bank of India rate for a currency is not available, value shall be 1% of the gross amount of Indian rupees provided or received by the person. 1% of the gross amount of Indian rupees. Now here, I don't have the RBI reference rate. In that case, I go to the bank to sell my foreign currency or buy my foreign currency. For a moment, I'll put it this way. So my employee has come back from Istanbul. This employee has carried with me some currency recognized by Istanbul. That particular currency is not available for RBI reference rate. Whatever authorized dealer is giving to me in INR, 1% of that is considered to be value of supply. Provided further, in case where neither of the currencies are exchanged in rupees. Like they say, my employee is coming from Istanbul. He has carried some currency which is recognized in Istanbul. I go to the bank and say, sir, I brought 10,000 currencies of Istanbul denominated foreign currency. Please keep it with you and give me a foreign currency which is recognized by Canada, say Canadian rupee. Now here, I go to the authorized dealer, I give foreign currency, I take foreign currency. So what is happening here? I as a customer, I don't give Indian rupees nor I take Indian rupees. There, my value of supply shall be equal to 1% of least of the two amounts which is exchanged, where the corresponding RBI rate is available if I have to convert into INR. We have received converting any of the two currencies into Indian rupee at the reference rate provided by RBI. Say foreign currency 1, foreign currency 2. I have gone to the bank saying that, look, I have foreign currency 1. I'll give you foreign currency 1. You give me foreign currency 2. Because I as a customer, neither giving INR nor collecting INR, what does the provision say? Use by RBI reference rate for this, use RBI rate reference for this. Least of this, please take into consideration. That will be provided further that in case where neither of the currencies are exchanged in rupee, value of supply shall be 1% of whichever is least. 1% of this will be considered as my value of supply. This is what my rule 32 talks about foreign currency. Provided also that person supplying the services services me at the excess of the option, adopt clause B for a financial year. And once this option is exercised, he has to use this particular option. So here, buying or selling reference to RBI is something is referred in clause A. I can use another option called clause B. Once I exercise this option, they say entire financial year as an authorized dealer, I have to use this particular option B. This is what they are referring to. What does the clause B say? Clause B says, at the option of the supplier, the authorized dealer, like the banker has a choice, authorized dealer has a choice to adopt clause B. At the option of the supplier, value in relation to supplier foreign currency shall be slab rates. There are three different slab rates. One is 1%, another is 0.5%, another is 0.1%. What do they say? 1% the gross amount of currency exchange for an amount equal to up to 1 lakh rupees subject to minimum amount of 200 rupees, 250 rupees, subject to minimum of 250 rupees. So here, any money transacted in foreign currency up to 1 lakh, 1% is my deemed to be value of supply. In case the amount is exceeding 1 lakh, but not exceeding 10 lakhs, but less than 10 lakhs, then they say the currency will be 1,000 plus 0.5% of the money. 1% of 0.5% of the money. So assuming I go to the bank for 2,50,000, what do they say? Your 1 lakh is falling in this slab. So 1,000 rupees and 0.5% of the gross amount of currency exchange for an amount exceeding 1 lakh rupees and up to 10 lakh rupees. So on this, I'll split this way. 1 lakh, 1,50,000. On 1 lakh, 1% happens to be 1,000. This is the value of supply for 1 lakh. On balance 1.5 lakh, I apply 0.5%. 0.5% of this happens to be, say, 750 rupees. Total happens to be 1,750 rupees. This 1,750 happens to be value of supply by the authorized dealer. So what happens if I exceed 10 lakh rupees? They say 5,500 rupees. 5,500 rupees plus 1/10 of a percent of the gross amount of currency exchange for an amount exceeding 10 lakh rupees. More than 10 lakh rupees, if I go for exchange, maximum of rupees 60,000. They say, since already of up to 10 lakhs, this is a commission. Over and above 10 lakh rupees, I'll charge 0.1% as a commission, subject to maximum of 60,000 rupees as my commission fee. This is a slab rate which is discussed in rule number 32. I'll just quickly come to your page number 49, where examples are given. Page number 6.50. Page number 6.50, where they are given some of examples. US dollar converted into INR, UK pound converted into INR. When I have $2, when two currencies, none of them is in INR. I went to the bank with dollar, I asked for UK pound. So what they have done, reference to RBI rate, I converted into both into INR. Least of these two, 4.41, 6.6. This 4,41,000 happens to be the least one. 1% happens to be my transaction value. This is what they have converted under rule number 32. Next is in relation to air travel services. Pretty simple. Air ticket booking. Air ticket. They have asked, first look at your basic fare. The basic fare on which commission is charged by the travel agent. Whenever you book a ticket, you have a choice to book directly from the air carrier person, that is like Indigo, Tata, or the other travel airline, what I can say, airline service providers, or through travel agent. Generally, there will be an indication that this is my basic fare. This basic fare is relevant for my domestic and for my non-domestic, that is international flights. Domestic flights, 5% is my value of supply. International flights, 10% is my value of supply. Very simple terms. Whenever a travel agent books a ticket, the travel agent will be charging something called commission, because the service given by travel agent is only commission. Only commission. On commission, 18% GST is charged by travel agent. With respect to the airport authorities who collect the fee, let us talk example of say Indigo. When Indigo has to collect 5,000 rupees from customer, of which 4,000 is indicated as basic fare. 4,000 is indicated as basic fare. In 4,000, if it is a domestic travel, 5% happens to be GST. In case of it is a domestic international travel, 10% happens to be my value of supply. On this, GST is applicable. 5% is my value of supply. On this, GST is charged by the transport authorities. This is my rule number 32 in relation to air travel ticket booking. Life insurance. Life insurance, pretty simple. Institute material is the best example. Pretty simple. Examination reference to this institute material before exam. This is a very easy way to remember your value of supply. When there is an insurance policy, which is connected with investment plan, what they say, whatever premium collected, from that deduct money allocated for investment, money allocated for saving. When I talk about saving, we have the investment policies where I'll say, I want retirement plans like pension. The money which is parked as pension, like assuming I collect 1 lakh from the customer as premium, out of 1 lakh, 50,000 is parked towards premium. 1 lakh minus 50,000, the balance money is considered as the value of supply for the purpose of charging GST, where the premium consists for investment plans. Second case, where there's a single premium which is called annuity policy. There are few insurance premiums where I pay only once, which is called as annuity policy, endowment policy or annuity policy. I pay once at the instant, on occurrence of an event, I get that particular money paid by the policy, what you call the guarantor, that is an insurance company. In this case, they say 10% of the single premium charge from the policy holder. Straight away, whatever money is paid as a policy, of that 10% is considered as my value of supplement. Third case, other than your policy with investment, other than single premium annuity policy, they say for year 1, 25% of the premium. From year 2 onwards, 12.5% of the premium is considered as my value of supplement. Fourth case, they say policy with only risk cover, then they say 100% of the premium collected will be considered as my value of supplement. This is what they talk about your insurance business. Fourth is your supply of goods on second-hand goods basis. Supply of goods on second-hand basis. Second-hand goods. In case of second-hand goods, I give a pretty simple example. Maruti True Value, MTV we call. Maruti True Value is a motor vehicle dealer who deals with buying and selling of old used cars. Like another example, Cars 24. So I buy, I do minor repair, and I sell. The only condition in this case, the condition they say is no ITC benefit. Where you're a dealer, where you're in the business of buying and selling old used cars, you're not taking any benefit of input tax credit. In this case, your value of supply shall be sale price minus purchase price. If this is positive, pay GST. If this is negative, no GST. Like example, scenario one, let me just say, this is my buying price, this is my selling price. Scenario one, I bought the vehicle for 10,000. I sold the vehicle for 12,000. When I compare sale price with the buying price, I had a profit of 2,000. On 2,000, I pay GST. That's my value of supply. Scenario number two, I bought it for 10,000. I sold it for 6,000. My loss of 4,000. Because I didn't make any profit, no need to pay any GST on this particular transaction. This is what Rule 32 talks about, buying and selling of the goods. Last but not least, the value of supply in case of a redeemable vouchers. Redeemable vouchers. Let me just quickly come back to your redeemable vouchers. They say value of token, voucher or coupon or stamp other than postage, which is redeemable. Value of token, voucher or coupon or stamp, which is other than postage stamp, which is redeemable against a supply of goods or services equal to money value of goods or services redeemable against such token, voucher, coupon or stamp. If 15,000 worth meal coupons is applied by the taxable person, value of supply of such coupon shall be 1,500 rupees. Now, this vouchers are nothing but this is exchange value of money. Exchange value of money. I gave an example when I spoke about time of supply, where I gave example of bookshop, where it gives vouchers preloaded with some money. Preloaded with money. When these vouchers are supplied, the value which I receive, like to give an example, I'll just come back to my PowerPoint presentation. Say, bookshop, let me just, bookshop, person gives a voucher for rupees 1,000 to a chartered accountant. Chartered accountant in turn gives this as a gift to his student. Now, say this on 15th Jan 2022, student comes to the bookshop and buys, say, stationery for rupees 200 and redeems voucher for rupees 200. Balance of voucher is rupees 800. So here, for the purpose of your time of supply, my time of supply under section 12 or section 13, whenever the redemption is done, that will be time of supply. And value of supply, though I have, as a bookshop fellow, as a bookshop seller, I gave voucher for 1,000. What they're saying, what is the value of money redeemed for purchase of goods or services? That shall be my value of supply. So here, as a bookshop person, what I will do, I will pay GST only on 200 rupees and not on 800 rupees. This is what my Rule 32 talks about value of supply in case of vouchers. I'm just making it simple for you to understand these provisions. Rule 32, Subrule 7. This is an ancillary provision where tax value of taxable services provided by such class of service providers, such class not notified of service providers as may be notified by the government on the recommendations of the council. Unfortunately, no recommendation has been made in this regard, as referred in paragraph 2 of Schedule 1. Paragraph 2 of Schedule 1, where there is no consideration in relation to import of services or services between the distinct persons. Where input tax credit is available, they say the value of supply shall be deemed to be nil. The value of supply shall be deemed to be nil. I'll just see if there are any questions before I go further. This paragraph 2 includes goods and services between related persons or distinct persons, which is made in the course of furtherance of business without consideration. Import of service is actually covered under entry number 4. Government, for some reasons, have not notified as on today any this particular activity. Aniket is asking this question. So there is nothing called game of skill as of today. After this new definition, Aniket, section 2, clause 102A, everything is called as your online, game of chance. That is how they have defined the aspect. Last leg of your valuation rules, rule number 34. Rule number 34, it talks about rate of exchange other than Indian rupees for determination of value. This is used at customs for the purpose of payment, collection of duty. So in case of goods, they are saying that for determining the value of supply, they adopt the value prescribed under Section 14 of Customs Act. So when you look at the imports and exports, all the goods which are imported into India, when I have to pay my customs duty, though the money is in foreign currency, I don't take RBI rate, I don't take authorized dealer banker rate, I take the rate referred by Customs Act 1962 for calculation of my IGST and basic customs duty. Similarly, as per my accounting policy, they adopt customs rate for the purpose of converting foreign currency to INR. In relation to services, import of services. When you pay the tax on import of services, the provision says the rate as per generally accepted accounting policies is acceptable for the purpose of finding value of supply. For the purpose of section 13, when it identify what is my value of supply in relation to import of services, the rate prescribed by RBI or authorized dealer is permissible for converting a foreign currency into INR. Last rule. Now, this is one rule where this comes as a Difference in GST litigation. Value of supply inclusive of IGST, CGST, SGST. The same. The value of supply is inclusive of IGST or as the case may be CGST, SGST or UTGST. The amount shall be determined as my tax amount is nothing but value including taxes into 100 divided by the rate of tax divided by 100 plus rate of tax. Now, sir, where do I use this particular rule 35? For a moment, let us presume that there is one recovery in P&L account. This particular recovery is covered under schedule number 2, which is considered to be a supply under section 7. Now, I as a dealer, I as a registered person, I didn't knew that I have to pay GST to the GST authorities. Let us assume that rupees 20,000 is shown as a miscellaneous income. And this happens to be a supply under section 7. Then what I will do, I identify what is the rate of tax. Assuming rate of tax is 12%. My value of supply shall be 20,000 into 100 divided by 112. This gives me a scope to pay tax on inclusive basis. So whenever there is a money received and accounted as income, but GST has not paid to the government authorities, we have to keep in mind Rule 35 gives me a guidance that inclusive of the rate of tax, I have to calculate my tax. The last slide for today's discussion. When we look at this valuation provisions, I have explained under Rule 27. Please examine the nature of business. This gives a clarity where my Rule 27 or Rule 29 has to be applied. Documentation for various elements in the nature of business for making the expectation of the GST authorities. Whenever I'm talking about Rule 27, exchange value. On the face of the invoice, like assuming you give an old mobile in exchange of a new mobile. Please mention on the invoice, say when you're issuing a tax invoice, you say new mobile, say 10,000, exchange old mobile concession 2,000, net value 8,000. Please bring the fact of the old value for the purpose of Rule 27 for the GST authorities to accept your argument. Examining the design and architecture of the present system of bookkeeping. Now, this will be helpful for my Rule 27, my Rule 28, my Rule number 29. Why I'm talking about this architecture? We have something called chart of accounts. When you prepare your chart of accounts, you should be in a position to design how you capture the value of supply for related party transactions, for non-related party transactions. One of them very, very important is your dealer transactions. Plotting various transactions in homogeneous better transactions and appraisal with legal compliance. You have to understand how you identify, like example, rule number 32. I could have a transaction where I buy and sell old used motor vehicles. I take the benefit of input tax. I don't take the benefit of ITC. No ITC. Assume for a moment, in one branch, I claim the input tax credit where I buy and sell old used motor vehicles. Like example, Cars 24. When you go to Cars 24, they have B2C division, they have B2B division. B2B division will be dealt with one branch. B2C will be dealt with another branch. Please try to make a segregation and design your architecture accordingly. Last but not least, disclosure in your statutory returns. You should know what is my money collected, what is my addition by virtue of section 15, what is my deemed value, for the purpose of valuation rules, and what value is going into financial statements, what value is going into my GSTR 1 or 3B. This reconciliation is built by using your annual return read with reconciliation statement. When I come to your chapter on returns, I'll make you to understand the dichotomy, the divergence in this procedures, how it help in a return for a better disclosure. With this, we come to the end of our today's discussion. Next class, we will continue with our other ancillary chapters, which are connected with procedural provisions. Till then, good night, goodbye.